Are you thinking about refinancing your mortgage? Well, in today's video, I'm gonna be covering the top 10 questions about refinancing your mortgage. Now, the problem is, a lot of people don't know where to start, especially if you're already a homeowner. Rates are low. You hear it in the news every single day. Is now the right time that you should refinance your home? Are there any pros? Are there any cons? Well, in this video, I'm gonna be covering the 10 most commonly asked questions when it comes to refinancing your home mortgage. And if this is the first time that you're checking out my channel, my name is Uyehara, sales manager with Loan Depot, helping you finance your homes all across America. Whether you're thinking of purchasing or refinancing, purchasing a bigger home, downsizing, or even an investment property, we got you covered. So make sure to hit the subscribe button and hit the description to find out more links on how to get your mortgage right. So let's hop into the video. So at number 10 on our list, we have what is the rate for a refinance? The thing you have to remember when pricing out a refinance, and I know a lot of times when you are looking online, you're going to some of these websites that you're seeing these interest rates that are advertised. You have to remember that interest rates vary from borrower to borrower, as well as state to state. So let's say you live in Texas and you own an investment property in Florida. The rate in Texas is not gonna be the same in Florida. So you wanna make sure that you're speaking to somebody who understands where the property is located and they're actually licensed in that state so they can help you and give you accurate information. Now, when a loan officer is pricing out a loan, there's several factors that we have to know in order to price out your loan. Some of these factors are the location of the property, the type of property that it is, whether it's a single family home, a condo, a duplex, triplex, fourplex, all these things are gonna matter when we price out a loan. The next thing, of course, we're gonna need to know your credit score. We'd also need to know the loan amortization period, whether you're looking at a 30-year loan, 20-year loan, 15-year loan. And we're also gonna need to know the occupancy, whether it's a primary residence, a secondary home, or an investment property. And typically on an investment property, the interest rates are slightly higher for an investment. So make sure that's also something that you need to talk to that loan officer about, because if they misquote you on a primary residence versus an investment property, you could be shocked at the difference in the interest rate. And some other factors, of course, we need to know roughly what you owe on the property and also what the property value is, because that's gonna determine what our loan to value is, or LTV. So to answer the question, what's the mortgage rate? It depends. We need more information, but that's where we're here to help you guys. So if you already have a lot of that information, feel free to comment below or send me an email. I'd be happy to price out a loan for you. So let's hop back into the list. Number 9, how long does it take to complete a refinance? Now again, this is also something that depends on the loan officer and it depends on the mortgage company that you're dealing with. Now, if we rewind to 2020, you guys can remember that COVID created a refinance frenzy. Rates were in the twos and people were refinancing left and right. Refinances back then took sometimes up to 60, 75 days to close. Again, it depends on the lender, it depends on the loan officer. You could actually deal with 2 loan officers at the same company and get a different result. Sounds a little crazy, but it's true. Now let's fast forward to today. Things are not as crazy as they were last year. So if you're thinking about refinancing, I would say you should be able to get a refinance done in 30 days or less. Number 8, is it okay to refinance multiple times? And that answer really just depends on your mortgage itself. I'll give you a story. For me, for example, last year I refinanced my home twice. I refinanced right before COVID happened. I actually took some cash out of my house, so that way I had some extra cash on hand just in case if I needed it. Plus, I was thinking about purchasing some investment properties. So I had closed my refinance in March, right before COVID hit. And then I refinanced at the end of the year, right around November, December, when rates dipped back down again, because I was able to lock in an interest rate under 3%. So I was able to pull some cash out the first time. My interest rate went up a bit. And then at the end of the year, I refinanced again, got my rate back down. So I was essentially able to pull some cash out and my mortgage payment hasn't even changed from the original amount. So I was able to pull some money, not change my payment, and invest that money into other properties, which now pay me every single month. And number 7, does refinancing hurt your credit? No, it doesn't hurt your credit. The only thing that could potentially hurt your credit is if you're having multiple people pulling your credit while you're doing the application. So like I've always mentioned, start building that relationship with your loan officer up front. Get an estimate. more often than not, they should be able to give you something in writing unless they're trying to hide some fees or something within this refinance. That's why I always recommend you folks get some estimates, get some options before you make your decision. For example, every single client that we deal with when it comes to a refinance, we typically ask them for their mortgage statement up front. I ask you, what do you think your credit score is, and all the other factors that I mentioned earlier in this video. That gives me enough information to then give you an analysis of your property. That's what the loan officer should be doing to help you decide what's the best option for you to do this refinance. Number 6, does your credit change when you refinance? The answer is yes. Your credit will probably be affected by the refinance. Now there's a couple of things that could potentially happen. Let's say you were paying off some debt and now you paid off all your credit cards, you have zero balances, your credit score will most likely increase. So more often than not, a refinance is going to be beneficial, whether you're consolidating debt or you're just lowering your monthly payments. That will then lower your overall debt on your credit report. Number 5, does refinancing increase your loan balance? More often than not, your balance will increase unless you're willing to pay all of your closing costs out of your pocket. Now, traditionally, when you do a refinance, everyone just rolls the closing costs into the loan balance. So let's just say, for example, you owe $200,000 on your home. The total cost of the refinance, let's say it costs $4,000. Your new loan balance would be $204,000. However, if you're doing a rate and term refinance where you're lowering your interest rate, even though the loan balance goes up, your interest rate goes down, which should then give you a net savings on your monthly payment. Now again, this goes back to the options that I always talk about. So make sure that if you are thinking about refinancing, your loan officer gives you several options to consider, maybe looking at rolling the cost into the loan or paying for it out of your own pocket if you have the ability to do so. That way you can decide what makes the most sense for you at the end of the day. And number 4, what is a good credit score to refinance your home? Well, again, this answer depends because there's so many different options and ways to look at a refinance. For example, let's say you bought your home and you only had a 580 credit score and you used FHA financing. Now your credit score at the time of purchase was at the lower end of the spectrum. Now let's just say your credit score now is a 640, 660, and now you could refinance, whether you look at an FHA streamlined refinance where all you're doing is lowering your interest rate, or potentially a conventional loan, depending on how much equity you have to remove your mortgage insurance. That may be a good option for you. Now, somebody else could be looking to refinance, let's say an investment property, where you would probably want at least a 720 credit score to make sure that you get the best rate possible on an investment loan. Now, every situation is going to be different. This is why the refinance process can be a little complicated and confusing, because there's so many different ways that a loan officer can look at a deal to see what's going to make the most sense for you. And remember, just because you hear of your friend or family or coworker who got a certain deal, that doesn't necessarily mean that's going to translate to you, because your credit scores could be different. Your loan balances are going to be different. So there's so many different ways to look at this, but at the end of the day, when we're talking about credit scores, you always want to have the highest, most optimal score possible. But if you have a general idea as to what your score is, you can always talk to a loan officer and ask them, hey, if my credit score is a 660, a 680, whatever that number is, where would I be interest rate wise? If you just want to shop a rate, you can certainly do it that way, just to give yourself a ballpark as to where you could potentially end up going into a refi. Number 3, is now a bad time to refinance? Again, my answer is going to be, it depends, because it all depends on what the goal of the refinance is. Are you looking to take cash out? Are you looking to lower your interest rate? Or maybe even shorten the loan term of your mortgage? For example, I talked to a client today. She has 2 mortgages, a first and second. Her first interest rate is 5.875%. And on her second mortgage, she's got 7.5%. So for her, it's gonna be a no-brainer for us to refinance this house for her. Now, you could have refinanced last year. Let's say you're at 2.5%. Interest rates today are much higher than they were last year, so it wouldn't make sense for you. But it all depends on what the goal is. You could also have a 3% loan, but let's say you want to tap into some of that home equity and go buy some rental property or even invest in the stock market. That might make sense if you can get a higher yield than what your new interest rate's going to be. There's a lot of factors that come into a refinance. This is why it's super important you make sure you talk to a loan officer who understands how to work these numbers for you. And number two, how much does buying a point down lower your interest rate? On average, as a rough ballpark, you can say about 1/4%. Now again, this is also going to depend on the overall file itself. So again, we have to look at credit score, loan amount, LTV, occupancy, all those things is going to matter as to how much the point is going to buy your rate down. So again, make sure when you're talking to your loan officer, you get a couple of options. But on general, you can say about 1/4%. And number one, what's a 30-year fixed rate mortgage today? And today, as we're shooting this video, for a primary occupancy type loan where you're not taking any cash out, you'd be roughly around 3.5%. Now, you might see some other lenders advertising lower rates, but the one thing I have to caution you on, like I always do in my videos, is to make sure you read the fine print. Many times when you do a refinance or you look at these lenders that are advertising rates online, they're charging you points. And sometimes it's not just 1 point. You might be paying 2, 3, 4 points sometimes, and they won't even disclose that to you. So make sure you read the fine print. Make sure you go through those questions with your lenders like I always tell you to do, and make sure you have options to decide what's the best mortgage for you. And don't forget, make sure to check out this playlist right here so you can learn how to get your mortgage right. And my name is Sean Uyehara, your mortgage expert, helping you finance homes all across America. See you on the next video.